Did you know Warren Buffett is currently sitting on 373 billion in cash, more than most countries in the world, more than Apple, Google, and Microsoft combined. But why is he doing this? All the rich investors are waiting for the market to crash. They claim they can make the most money when the market crash and not when it's in all-time highs. Warren Buffett says that the whole market is too expensive and that's why he's waiting. In this video, we're going to learn how you can benefit the most from if the market crashes, why the rich wants the market to crash, and why this could be the biggest opportunity if it truly crashes. Let's dive in. Hey guys, this is Alon.stocks and I post free daily content about the stock market and investing to help you reach financial freedom. I would like to mention this content purpose is educational only and this is not financial advice. Please like and subscribe and let's get into it. I would like to take you back in time to April 2025 when the market went down 21%. People were losing so much money, individual stocks were plummeting, and the S&P looked horrible. But the people who looked for the longer term, the market in this 6-month period went up by 45%, and individual stocks absolutely skyrocketed. The S&P forged an all-time high after an all-time high, finishing with a record year. For example, Nvidia, the biggest company in the world, 5 trillion market cap, went down 42%. And if you would have bought in the dip, you would have earned a total return of 143% in 6 months. That's insane. This also applies to other stocks like Apple. After going down so much, forged the dip in April, almost 40%, and then went up 70%. This is how insane this is. So you're probably thinking, how can we make money? So after a crash, there is a panic selling. Everything sold out. Price drops sharply. So all the great stocks like Nvidia are in sale. They're for sale. So you can buy the dip, invest in index funds, quality stocks, and then when the market recovers, you get returns, high returns, because you bought in the dip in the lowest possible point. Here's the thing, I did not invent this strategy. A lot of wealthy investors use it. For example, the writer of Rich Dad Poor Dad, the author, Robert Kiyosaki, is gonna talk about it right now. Let's watch the clip.
I love crashes. When the markets crash, that's when I get rich. So
let's see the power of buying index funds like the S&P 500 when the market crashes. So it's called dollar cost averaging. If you just buy S&P 500 every month, does not matter the price, in 2008, after a 56% downfall, up to 2023, you'll be up 357%. In the dot-com bubble, in the COVID crash, okay, this is even not updated because we're in 2026 and the market has went up a lot since then. Investing in the S&P 500 is one of the safer and most resilient ways to ensure that your money grows over time. Now, the second method is a little bit more complex. So you take a group of stocks of high value companies. For example, I have these ones, Microsoft, Apple, and Nvidia. Why I chose these stocks? Because I saw and read the financial reports, the earnings. And I think those are companies that they will recover pretty nicely and have great potential. So now you go for each and every one and you choose a buying point. For example, with Nvidia, my buying point is 160. Between 160 to 165. I put an alert and everything is very nice. It's important to say this is more of a long-term approach to things and the complete opposite of technical analysis. So it might not work in the first 2 months, maybe, but in the end you value the companies because of their high earnings, because of the revenue, because of how much they're worth in the AI revolution or something. You should pick companies you actually believe in and you know that they have good financial data. For example, our second stock, Apple. So now I want to buy her at 230. Add an alert. Very simple. That's how it's done. I would like to clarify, I do not insure, or I'm not 100% sure there will be a crash. Maybe we're gonna go to another rally. This is just if. It's a situation if a crash occurs. Thank you guys for watching. I hope you enjoyed it and goodbye.